Morning, madam. We are from Group 7, and today we are going to present about our analysis of selected Malaysian companies for investment. First, I will introduce our group members. Our group leader is Isran, and our group member including me, Esther, Rishan, and Praise. For our portfolio analysis, we have chosen 5 companies including Genting Berhad, SIM Berhad, Petronas Chemical Group Berhad, Celcom DG Berhad, and MISC Berhad. Let's start with Genting Berhad and SIM Berhad. Genting Berhad is a conventional company and a major player in Malaysia's corporate history. It started as a hilltop resort in 1965 and has grown into a global investment holding company operating in 9 countries. Its core profit comes from leisure and hospitality, which makes up about 83% of its 2024 revenue. It benefits from global tourism recovery and invests in renewable energy and life science. However, it carries high financial and regulatory risks, especially due to gambling activities. So it is not Sharia compliant. Conventional investors may find it attractive, but Sharia conscious investors should avoid it. On the other hand, Sintari Berhad is a Sharia compliant company operating in consumer, industrial, and automotive sectors. It has strong regional presence and market reputation, and its revenue grew by 39% in 2024, driven by multiple division and geographic diversification, which reduce country-specific risks. SIMW is classified as medium risk and is suitable for long-term and Sharia-conscious investors. Next, we move on to Petronas Chemical Group Berhad and Celcom DG Berhad. Petronas Chemical is a conventional company and a leading integrated chemical producer. It has a diversified product portfolio, strong Petronas Group support, and steady dividend payments. Risks include oil price volatility and capital-intensive operations. And besides, Celcom DG is Sharia compliant at the company level. It formed from the merger of Celcom and DG and is Malaysia's largest mobile network provider. Its growth is supported by rising mobile usage, profits, and dividends. Stability comes from recurring subscription revenue, though regulatory and infrastructure costs are potential risks. Moreover, we will talk about MISC Berhad. MISC Berhad is Sharia compliant, operating in shipping and energy infrastructure. It is government-linked and benefits from growing maritime trade and LNG transportation. Its revenue is stable due to long-term contract, though it faces risks from oil price, regulations, and geopolitics. Its core activities are halal, making it suitable for ethical and long-term investors. And that's all for me. I'm passing my mic to the next man. Thank you.
Thank you, Waija. So, for my part, I will briefly analyze the stock performance of our 5 Malaysian companies from 2022 to 2024 using 4 indicators, which is annual return, earnings per share, return on equity, and the price to earnings ratio. So first off, we have Genting Berhad, which shows a clear recovery, then decline pattern. After a small positive return in 2022, the stock fell in both 2023 and also sharply in 2024. The earnings recovered strongly in 2023, but then softened slightly in 2024. For the ROE, it followed the same trend where it improved after the losses, but then easing out. So overall, Genting's performance suggests post-pandemic recovery, but later weakened due to its rising costs and market uncertainty. So for the next slide, we have Sime Darby Berhad. Among all our companies, Sime Darby Berhad demonstrate the strongest financial improvement amongst it. And although its annual return slowed and turned slightly negative in 2024, its EPS and ROE had rose sharply, especially for the year 2024. The falling P/E ratio suggests that the stock may be undervalued despite its strong profitability, which makes Sime Darby more financially solid but under-recognized by the market. So in contrast, Petronas Chemical Group, it had experienced consistent decline and its annual returns were negative throughout the period, while the EPS and ROE had dropped significantly each year. Although the P/E ratio had increased, it was due to falling earnings instead of a stronger valuation of the company. So overall, Petronas Chemical Group faced serious profitability pressure and also declining investor confidence. So moving on, we have Celcom Digi Berhad. Its performance reflects a post-merger adjustment cycle where the investor optimism was strong in 2022 and 2023, and its EPS and ROE had improved. However, in 2024, there were higher operational and 5G related costs, which led to a sharp fall in returns. The company remains profitable right now, but cost control is still very critical for them. So for the last part, we have MISC Berhad, which showed stable share prices but volatile fundamentals. Its returns were modestly positive overall, which its EPS rose initially and then dropped sharply in 2024, and its ROE had turned negative due to equity issues. The rising P&E ratio in 2024 signals that there is a higher perceived risk despite its stable prices. So in conclusion, among all the five companies, Sime Darby appears the strongest fundamentally. Genting and Celcom Digi has mixed recovery patterns, while Petronas Chemical Group and MISC face deeper structural and profitability challenges. That's all for me. I will be passing it to Praise.
Thank you, Esther. So right now I'll be speaking about the technical analysis where we cover price trend, moving averages, support and resistance, and the momentum analysis. For Genting, from 22 to 23, it is sideways near MA 50 to 200, which is on hold. Then early 24, there will be a bullish breakout that's on buy. And 24 to 25, there's breakdown below the both MAs, which is to sell and avoid. But for moving average, 24 which means the golden cross and it's bullish. And 24 to 25, both are also below MA, so it is bearish. So during the support and resistance, early 24, there will be a resistance breakout, which is to support. And late 24, there's a support breakdown, which is to have resistance back again. For RSI and MACD, so around 24, RSI is more than 50, so it becomes a strong momentum. But late 24 to 25, RSI becomes less than 50, which is to become a weak momentum. So this will be this Sime Darby Berhad trend analysis. So for the price trend, 22 to 23, it will become sideways because of the ringgit increase, which is on hold. Then early 24, there will be a breakout from 2 ringgit and 80 cents to buy. And late 24 to 25, there will be a downtrend, whereas to sell and avoid. For the MAs, early 25, it is a golden cross, so it's bullish. But on 24, the price and the 50 are below 200, so there will be a bearish resistance. So for the support and resistance, early 24, there's a resistance turn into support. But late 24, the support is broken and it turned back into resistance. For the momentum, for early 24, RSI is more than 50, so MACD is bullish, so it equals to strong momentum. But late 24 to 25, RSI is less than 50, so it becomes a weak momentum. So for Petronas, this will be look of the stock. And next slide. There will be the price trend where 2022, there will be a strong uptrend, which is to buy. But 23, the trend suddenly weakens, which is to sell and avoid. Then 2024 and 25, the sideways, it goes sideways to downtrend, which is to avoid and sell. So for moving averages, 22, there's a golden cross. Then 23, there's a death cross. And 24 to 25, the price goes below MAs, which is bearish. And now support and resistance. Support goes in increase in ringgit again, and resistance, both of them also has go on increase along with the both MAs, so upside is likely to be corrective. Then from momentum, RSI is more than 50 and it becomes bullish. 23 and 25 until 25, RSI is less than 50, so it's bearish. Next slide. So this is for Celcom Digi Berhad, and this is a look of the stock. Next slide. This is the price trend where early mid 22 is a downtrend, which is to sell and avoid. Late 22 to 24 is a uptrend to buy. And mid late 24 to 25 is another downtrend, which is to sell and avoid. So both MAs, there will be a golden cross on 23 and 24 to 25. There 200 is more than 50, so it's a bearish. Next slide. So for the support and resistance, it is uptrend where the resistance becomes a support. But then there's another downtrend again, but the support is broken, so it goes back into resistance by the end of 2025. So the momentum, it becomes a bullish because RSI is more than 50 and it's become positive. But as of 25, it becomes bearish again because RSI is less than 50. So next slide. So lastly, for this company, MSIC, and this is the look of the stock. So the price trend is very interesting. So on 22, it went uptrend, so buy with stop loss. But 23 went sideways, so there's a buy on Golden Cross. And 24, there's a strong uptrend, then reversal. So it means sell and avoid. But on late of 25, there's an early recovery. So everyone should buy it cautiously. So from MA, on 23, there's a Golden Cross, and 24, there's a Death Cross, but 25, the MA goes up. So the trend is rebuilding. There's the support and resistance where 22 to 23, there will be a support of increased ringgit and resistance of also increased ringgit. So it means consolidation. But as of 24, it breaks above 7 ringgit and 80 cents as shown in slide, so it becomes bullish. But 25, there's a support re-established, so it becomes a recovery. So for the RSI, for 24, RSI is more than 50, so MACD is strongly positive, and there's a strong bullish momentum. But on 24, RSI is less than 50, so it reversal. And on 25, the RSI is stabilizing, and there's an early recovery. So overall, everything is all the technical analysis from all the 5 companies. I'll pass it on to Ishan. Thank you.
Thank you, Praise. Here is a portfolio allocation table. This portfolio is constructed by combining stock performance analysis and technical indicator to balance risk and return. Genting Berhad is allocated 20% as high risk, high return stock, supported by improving EPS, ROE, and a positive PE ratio, indicating earning recovery, while technical signals such as the Golden Cross in early 2024 show upside potential despite renewed weakness later in the year. Send Derby also received a 20% allocation due to its medium risk profile, strong ROE growth from 2022 to 2024, declining PE ratio driven by earning growth, and relatively stable technical movement, making it a solid core holding. Petronas Chemical Group Berhad carries the highest weight at 25% as a medium-high risk, cyclical stock with declining returns, EPS and ROE, but low PE valuation and strong fundamentals supported by Petronas backing indicate long-term recovery potential. Celcom Digit is assigned a lower 50% weight as a defensive stock with stable EPS and ROE, despite big technical momentum, helping to stabilize the portfolio. Lastly, MISC received 20% due to its medium risk profile, low PE providing downside protection, and technical indicators showing cyclical stabilizations and moderate momentum recovery. Next is risk appetite. This portfolio has a moderate risk appetite with a growth bias, accepting short-term volatility and earning fluctuations to achieve long-term capital appreciation. It's combined lower risk core stock like Send Derby and Celcom Digit with higher risk growth stock like Genting Berhad and Petronas Chemical Group. Risk is managed through sector diversifications and control allocation, making the portfolio suitable for investors seeking stable long-term return without excessive risk. Next is diversification. The portfolio is diversified across 5 sectors: textile, industrial and plantations, petrochemicals, telecommunications, and shipping and energy logistics to reduce reliance on any single industry. This balance between cyclical and defensive stock sector helps manage volatility while maintaining growth potential. Next, we calculate average return, expected return, and standard deviation for each stock. So for individual stock and portfolio return, based on historical data from 2022 to 2024, Genting Berhad and Petronas Chemical Group Berhad record negative average return, reflecting their sensitivity to economic cycle, commodity price, and global demand conditions. In contrast, Send Derby Berhad and MISC Berhad achieved positive average return supported by diversified operation and stable revenue, while Celcom Digit delivered mixed results due to firm-specific and market pressure despite its deficit nature. When weighed together, the portfolio recorded a negative expected return of approximately negative 4.25%, largely driven by higher allocation to Genting and PCG. However, this outcome reflects a growth-oriented strategy that accepts short-term underperformance in anticipation of future recovery. Lastly is portfolio risk. Portfolio risk is measured using standard deviation, which show that Genting Berhad, Petronas Chemical Group Berhad, and Celcom Digi Berhad exhibit higher volatility and therefore higher risk, while Siem Darby Berhad demonstrate moderate volatility and function as a medium risk core holding. MISC Berhad has the lowest standard deviation, acting as a deficit stabilizer within the portfolio. Overall, diversification across high and low volatility stock help manage risks and preventing over-reliance on any single stock or sector. Let's hear from me. Thank you.
Thank you, Ishwan. So basically, I'll be talking about the conclusion. So this slide summarizes our portfolio analysis for the 5 Malaysian stocks under review. We use the combination of fundamental, technical, and portfolio analysis to evaluate the performance and investment suitability. Overall, the portfolio reflects a moderate risk level with a sector diversification helping balance stability and growth. Looking at the stock performance, Siem Darby and Celcom Digi stands out as our growth leaders. They show a strong earnings, high return on equity, and suitable business models, making them the ideal candidates for overweighting. MISC Berhad serves as a defensive anchor in the portfolio, providing a steady cash flow throughout long-term contracts, which helps reduce overall risk. On the other hand, Genting and PCG are considered as the higher holdings due to their cyclical demand, earning volatility, and regulatory or operational risk, so they are recommended for underweighting. Our technical insights, including moving averages, RSI, and MACD, confirm trends and momentum. Early to mid-2024, several stocks saw bullish momentum, while late 2024 reversals highlighted the importance of timing and continuous monitoring. This reinforces the need to combine technical indicators with the fundamental analysis rather than relying on them alone. In conclusion, our strategy is to overweight strong growth stocks, maintain defensive holdings, and cautiously manage higher risk stocks. This portfolio is suitable for moderate risk investors seeking a balance between capital growth and income stability while remaining flexible to adapt to the market changes. So overall, this portfolio is a balanced, diversified, and ready to respond to changed market conditions. Thank you.